Hi, folks, and welcome to White Collar Week. It's the isolation that destroys us. The solution is in community. Today on the podcast, we have my colleague and friend, Kelly Phillips Erb. Kelly's a tax attorney, business advisor, and host of the Taxgirl Podcast. I reached out to Kelly after reading her column in Forbes about SBA PPP loans. She read my article on entrepreneur.com on the same subject, and she invited me to be on her podcast. It was one of my favorite interviews ever. You can find the link on our website, prisonist.org. Today's podcast continues our conversation and broadens it to include good, solid business and tax strategies that small business people can use to get through these distressing economic times. While many small businesses will certainly go under during this pandemic, unfortunately, others will reset, repurpose, and flourish. Of course, we also give updated information as to SBA PPP and EIDL loans. So coming up, our small business edition with guest Kelly Phillips Erb on White Collar Week. I hope you will join us. Hello, and welcome to White Collar Week, a podcast sponsored by Progressive Prison Ministries, the world's first ministry serving the white-collar justice community. I'm Jeff Grant, co-founder and your host. I served almost 14 months in a federal prison for a white-collar crime I committed when I was a lawyer, so I know that it's the isolation that kills us, and the solution is in community. So let's get started. Hi, folks, and welcome to White Collar Week. Today we have a special guest on, Kelly Phillips Erb. Kelly and I have a great short history together. I reached out to her after one of her articles in Forbes on SBA PPP loans, and I guess she liked the email I sent her.
Yes.
She then checked out an article that I had written in Entrepreneur on the same subject, and we became friends. And I appeared on her Taxgirl podcast, which is a fantastic podcast. She's had great guests on already in its new iteration. And you can find out more information about that on our website, and there are links to Kelly. But I thought I would have her on tonight, and we would talk about small business in general. I think that the headlines are being dominated by things like stimulus checks and by PPP forgiveness, all important topics. But if I had a small business right now, I guess I do have a small business, but if I had a small business right now and I was struggling to survive in these times, what I'd really want is, what do I need to do in order to get through or get over the hurdle? And so many businesses are not going to make it, unfortunately, through this. But there are some that will prosper, and mostly I think those are the ones that are fleet and can turn quickly and adapt. So we're going to talk to Kelly all about that, and certainly some of the tax aspects, as well as SBA PPP and EIDL and all of that. So Kelly, welcome to White Collar Week. It's so good to see you again.
Thank you. Thank you so much for having me. I'm excited to be here today.
Yeah, it's really great. So Kelly, what I'm going to do is, as we discussed, I'm going to give you 4 or 5 minutes just to give your background and kind of who you are, and you can talk about driving your daughter down to North Carolina for college if you want. But anything that will have our audience kind of get to know you better, and then we'll just kind of launch into the conversation.
Sure. Well, since you mentioned my daughter in college, I'm a North Carolina girl. I grew up in southeastern North Carolina in it was tiny then, tiny little town called Hampstead, North Carolina. And I was lucky enough to get accepted to the North Carolina School in Science Mathematics, where I went to high school, and then I went to Meredith College. So I was a North Carolina girl my whole life. I broke my mother's heart when I applied to law school and moved up north. I tell the story. My mom's very Southern, and I went to Temple University School of Law in Philadelphia, Pennsylvania, and I was there a week. And we were having my mom came up to see me. We were having breakfast at the Broad Street Diner, and my mom just sat there very, very quietly, didn't say anything. And then at one point, she said, "Listen to her, Wayne. She sounds just like a Yankee." And I'd only been there a week. But I loved Philadelphia. I loved everything about it. And so I stayed. I was lucky my last year of law school, I got an internship at the Internal Revenue Service. I had always said I'd never take tax classes, but I had this one professor who was phenomenal. I'd actually taken her class as a last resort to get away from some of the trial work because I didn't want to do trial work. And I just happened to stumble into this class that I loved and started following the professor instead of the subject. So if I saw her teach something, I'm like, I've got to go take her class. And ended up loving it. And so not only did I get my JD, but I got my Master's of Law in Tax as well. And right out of the gate, I started doing actually estate planning work, high-end estate planning in a little town in New Jersey. And then I moved to Center City, Philadelphia, where I also did high net worth estate planning. But my heart was more towards middle class. That I grew up. I didn't know any female lawyers growing up. I knew one lawyer, just someone in my church. I grew up in an area where people didn't have access to legal services. So it was important to me to be able to provide sophisticated legal services to normal people. Because I think sometimes we get into this habit of assuming that people who need legal help are only high-end people, and that's not true. There are small businesses, there are families who need estates work, there are businesses who need succession planning. And so when the more I started working, especially with businesses that needed succession planning, the more I started helping folks with individual tax needs. And so I sort of kind of morphed into, it's funny, I would consider myself a generalist now, which is something I would have shunned before because I wanted to be niche-y, like everybody wants to have a niche. But I actually consider myself a generalist, but with a specialty, which is that I tend to focus more on like middle class individuals and small businesses. So that's kind of in a nutshell how my legal career began. And then a few years in, my husband and I actually decided we both left our big Center City firms and started our own firm together. And we did our own website, which is at the time was very high tech of us. And I started doing updates on the back end. And it was hard at some point to always update on the back end. And so I had heard about this thing called a blog. And I'm like, you know what I could do? I could just do a blog and put all my tax updates up there. So that's what I started doing. I started a blog. I think my dad maybe was my only reader for the first couple of years. And then one day I got a nice email from the American Bar Association Journal to let me know that my blog had been nominated for one of the best blog awards. And then eventually Taxgirl, which is my blog, it got accepted into the Blog Hall of Fame with the ABA. Yeah, journal, which was nice. And it attracted some attention from some other folks. So since then, I've had the opportunity to write for some really great outlets like Time. And I've been interviewed by BBC, and it's been really cool. Mm-hmm. But I still mostly do my blog. And then I have regular columns at Forbes and at Bloomberg Tax. So I'm kind of all over the place when it comes to talking about tax. But one of the reasons I am, and I feel very strongly about this, is that I don't think we make tax accessible to people who need to understand these really sophisticated concepts that affect all of us. And again, if you have tons of money, you can pay some of these premier law firms, and they're great to give you advice. But sometimes you just want to know where your stimulus check is or how you can amend a return, and you don't have the resources to pay somebody to find that out. So I'm your tax girl.
That's fantastic. That's fantastic. I haven't told you this, but I kind of got myself started through a blog too.
Oh, really?
But of course, by then I had gone through my legal issues, and I'd been to prison, and I came back from prison, and I wasn't practicing law anymore. I can't practice law anymore. But I had become a minister, and I was ministering in the inner city, in Bridgeport during the day, but in the evening and early morning, I was going to recovery in where we lived in Greenwich, Connecticut. So it was a little strange living in Greenwich and working in Bridgeport. And I was blogging about the kind of differences, the cultural differences and the similarities between those two vastly different socioeconomic places,
that's cool.
although in the same county.
Yes.
And I got a call one day from a hedge fund reporter, and he said to me, "Are you the hedge fund to ministers? I mean, you're the minister to hedge funders."
Uh-huh.
And I said, "Well, no. I mean, I minister in the inner city, and I work with hedge funders in Greenwich, but I've never put those concepts together." And he said, "Well, maybe you should." And that's how it all started.
Oh, wow. That's
Isn't that,
cool.
isn't that wild?
Yeah. Yeah, I kind of miss the days back when blogs were newish, because I do think there was a lot of really good content that came out of just that kind of thing where somebody says, why don't you write about this? This is what we're missing, rather than what's going to get me a CO. And, now some of it's so manufactured. But back in the day, it was really cool that, because I do the same, like people email me story ideas. They ask me questions for my Ask the Tax Girl, and it's still very reader oriented. And I love that. I love that somebody read stuff and knew stuff about you and asked you to do something else or inspired you to do something else. I think that's cool.
So we're in a time period now that is probably perfect for your expertise and also for being empathetic and caring and compassionate towards people who are who need their businesses to survive. And yet we know that many of these businesses are not going to survive.
Right.
So what I'd like to just start to dive into is kind of what's the prototypical situation right now? Like what's going on where you and I are both getting phone calls from people and they're upset, they're crying, they don't know what to do.
Right.
And what's the real driver of that? And is it that business is dried up? Is it that they never really had they haven't had a handle on their businesses for a long time, for example? And this has just amplified all that. So what's the prototypical small business phone call that you're getting now, and how do you respond?
So since I'm tax oriented, so a lot of my phone calls are obviously going to involve tax. So the small businesses that I'm hearing from right now that are struggling, I would say the main struggle for a lot of them is this idea that they were going to kick the can down the road. And what I mean by that is it might have been someone who called me last year because they had a tax problem. So maybe they owed, let's say, under $25,000 last year in taxes. But they really didn't want to do too much right now to attract attention with the IRS because they were fairly confident 2020 was going to be their year.
Yeah.
They were going to make enough money and they were going to pay off this other debt. And it was all going to go away. They just wanted to know the best way to do that. If they're getting a notice from IRS, how do they respond to it? Like that kind of thing. And so where we are now is those people who maybe at the end of 2019 were in a holding pattern to see what their options were in 2020, never had that moment where the economy, or maybe they did in February, where things were good and they thought they were going to be able to fix things. And that's a common, so I'm a fixer. That's sort of not like in a Michael Cohen fixer way, but I'm a fixer in that I help people fix their tax problems.
More a Michael Clayton kind of way.
Yeah, hopefully. So I help people who are in a jam, right? So that's a lot of people that are calling me are not calling me because they want general advice, but they actually have a specific problem. And I would say that with small businesses in particular, especially if they're an S corporation or if they are a pass-through of any other sort, like an LLC, where they're not taking a wage, where they're not having payroll tax withheld, those are the people who tend to get into the most trouble. And I don't mean the most trouble like in a mean way. I mean like the most tax trouble because they didn't have enough withheld. They needed to make estimated payments and they didn't.
Right.
And then again, a perfect example is, you make quarterlies all year long. At the end of 2019, if you already owed money, chances are you weren't writing a check to cover your estimated because you already owed a debt. So you were thinking, as soon as that next big check comes in, I'm going to fix this.
Right.
And the next big check didn't come in.
Right.
And so that's what I'm hearing from a lot of people right now. And again, that also extends when I say small businesses and pass-throughs, that extends to freelancers. So gig workers. And it's funny because I think we come to believe that gig workers are people who make just a little bit of money. And that's not always true, because while there are people who are gig workers who are driving an Uber part-time on the weekends, there are people whose actual real jobs are considered gig economy by the IRS. So, for example, I have a doctor who he's an anesthesiologist who is a client of mine, and he travels. And he is not a employee of any particular hospital. He has visiting privileges at many hospitals. He makes a lot of money, but that means he has to pay big quarterlies. I had about a month ago 3 clients that lost their jobs in 1 week. And it was hard for me because they all called me and said, what am I going to do now? Because not only do they not have money moving forward, but these were people who had existing liabilities. And so when you're trying to, cut a deal with the IRS, the idea is that you're going to tell them how you're going to resolve something. It's really difficult to figure out how to resolve something when you're not sure how you can pay your mortgage. So that's kind of what I'm hearing right now is I'm hearing from people who already had problems and now they're worse.
Well, are these people that are going to be pointed potentially somewhere down the line towards a bankruptcy or towards an offer in compromise? I mean, when things get dire enough,
right,
it feels like the options change.
Right. Yeah. So the problem with bankruptcy is that bankruptcy is a valid option for a lot of folks and a lot of small businesses. The problem with bankruptcy in a tax context is that there are very strict rules about what you can discharge and what you can't in bankruptcy. Right. And without getting too technical, because it matters, the type of bankruptcy matters. There's a lot of things that matter. But the general rule is there's certain types of taxes that you can't discharge. Those are trust fund taxes. So withholding, like employee withholdings. Sales tax is another good example. So those really can't be discharged in bankruptcy typically. And then most recent tax years usually cannot be discharged in a bankruptcy. So bankruptcy, I don't see a lot of folks that come through my door where that's going to be like the number one option. Now, I do have occasionally, like I actually had a guy that I referred to a bankruptcy attorney recently because and he's not happy because he doesn't want to do bankruptcy, but there's not a lot of other options that I can give him at this point. You mentioned offer and compromise. Offer and compromise does work for some people. So an offer and compromise for folks who are listening who don't know what that is, it is when you tell the IRS, I can't pay everything. Typically, it's when you say, I can't pay all that I owe, so I'd like to work out a deal. So either you're going to give them a lump sum or you're going to agree to pay over time a smaller amount. The success rates with offers and compromise are very, very low to begin with, and they've been declining. Unfortunately, there are a few tax resolution firms out there, and I'm saying firms. I'm actually making air quotes. Down the name below my desk. There are good ones out there, but there are also mills where they take your money and they don't get you very far because they give people false hope that they're going to be able to get pennies on the dollar. And there was actually a very famous attorney who used to use that phrase quite a bit, and she's no longer practicing because she got in a lot of trouble for basically operating a mill. But there are a lot of people who have been taken advantage of by these kinds of services where you give people this idea that if you owe a lot of money to the IRS, you can walk away by paying just a little bit of money.
Yeah. And
those cases are very, very rare. Usually you have to have very extenuating circumstances because the IRS has a formula. And the quick and dirty thing to understand is that they generally have 10 years from the date of the assessment to collect. So if you didn't, let's say you filed your tax return on time in 2019. So you filed it for 2019 and 2020, and you filed it by July 15, which was the deadline this year.
Right.
2020, the IRS can chase you for that money from July 15, 2020 to July of 2030. So they have 10 years to chase you for that money.
Right.
If you're out of work this year, yes, that's unfortunate. And yes, maybe the IRS will stop hounding you for a year, but that doesn't mean they're going to give you, grant you an offer, because they're going to look at how much money you owe and how much time they have to collect. And let's go back to that one I said earlier. Like, let's say you owe $25,000, which feels like a lot of money, right? But the IRS is thinking they have 10 years to collect $25,000. They're usually going to be pretty reasonably sure, especially if you're only having a short-term hiccup, that they're going to be able to collect that money from you. If you owe $1 million, and this is where those statistics get a little skewed, where people look at it and they're like, oh, but other people get these pennies on a dollar. If you owe $1 million, and realistically, you're not going to make more than $20,000 a year or whatever because of your circumstances, then the IRS is looking, and they're going to be a little more logical, right? They're going to say, there's no way, if this person isn't even making $100,000 a year, how are they going to pay us $100,000 a year? So then they're more willing to take a haircut. So that's there's a lot of factors that go into those offers. And it also depends on circumstances. Again, if it's a short term, if you've lost your job this year, there are things you can do to get IRS off your back. You can go into something called uncollectible status, which is where they just stop calling you. But that doesn't mean that the debt goes away. Right. And so one of the things I try to encourage people to do is think about long-term strategies, because when I mentioned earlier that there's a lot of this kicking the can, if you're just kicking the can year after year, that 10 years is going to become, eventually it's going to run out. And the closer you get to the end of it, you're thinking this is good because there's only a little bit of time left. The IRS is also thinking, oh my gosh, there's only a little bit of time left. And so they're likely to be more aggressive. And that's when they start, it may be more likely that you're going to see liens or levies or something that actually puts your other assets in jeopardy. So that's why I try to tell people, like, don't not open the mail. Don't not answer the phone. Like, don't put these things away and think you're going to think about them later, because pushing them down the road makes them bigger and they don't go away.
Yeah. Our audience on this particular podcast is not just people who have criminal justice issues or people in the criminal justice ecosystem, but lately it's people who are concerned that they may get swept up into a lot of bad decisions that they've made, or I don't want to necessarily use the word bad, maybe unhealthy decisions they've made. And certainly one of them is not prioritizing correctly, as you've just said, because you're responsible for the 941s, and that's other people's money.
Yes.
Right? It's not your money, it's other people's money. And so if someone came in and said, listen, I have X amount of dollars and I need to apply it in a methodical way, or I know that I'm confused as to what, but maybe you're going to tell them that you need to apply it in a methodical way, but they're confused and they need to know what to do first, second, third. Certainly paying trust funds, paying other people's money is right up there at the top.
Right. Because obviously if you have a certain, you only have a certain pile of money and you have bigger liabilities, you want to make sure that you put your money towards the things that are going to be the most beneficial. And the first thing, like you just mentioned, so I talked about trust fund taxes earlier, things like sales taxes, payroll taxes. That wasn't your money to begin with. So if you spent it, the IRS will chase you for those. And depending on the circumstances, you can actually get into trouble. So when you hear people talk about how the IRS sees things from them, or they went to jail for IRS fraud, that's not the normal collections process. Like, the IRS understands that people don't necessarily have money. Where people tend to get into a lot of trouble, whether on the criminal side or again on the seizure side, where your stuff is actually at risk of being taken, is when you don't pay attention to IRS when they come calling. So you ignore them a lot, and that makes them mad. But also when you're spending other people's money, because you have to remember that those sales taxes that you collected from your customers but didn't pay to the state, that wasn't your money to begin with. So it's not that you're not just paying your taxes, which is what's happening like on an income tax. Like if I decide not to pay my taxes on the 1040 this year, I'm just not paying my taxes. But when I'm not paying those trust fund taxes, that means I've taken someone else's money probably spent it, because that's where most people get into trouble. They think that they're like, okay, I've got $10,000 worth of sales taxes. I need to pay rent. I'm going to pay my rent, and then I'm going to make enough money next month that I'll just put the $10,000 back. If you don't do that, if you don't pay that off, that can be problematic because that wasn't your money to begin with. And that's where when you sometimes hear people getting into trouble, like again, criminal charges, that sort of thing. So if you came to my office and you said, I have some money out, some tax liabilities, I would say, let's look at what kind they are. If there's tax liabilities that are related to those trust fund taxes, that's where we need to start checking those off first. And then you start looking at the age of taxes, because as I mentioned before, there's a statute of limitations on collections. Mm-hmm. If you have really old tax liabilities and you have really new tax liabilities, depending on your circumstances, and obviously, everybody's situation is different, but a lot of times paying those new tax liabilities makes more sense, because eventually those old ones are going to fall off, right? They're going to go away if they're not trust fund taxes, if they're just normal taxes.
Right.
They're going to go away because the IRS can't collect forever on those. It's different though with states, and this is why, being lawyers, we always tell everybody, but it depends. Like in my state of Pennsylvania, there is no assessment statute of limitations. They can chase you forever. A lot of localities are like that too. Philadelphia has some of those kinds of laws. So the reason it makes sense to go see a professional, even if you can't afford to pay a professional forever, like even if you just need to sit down and pay someone for an hour of their time to kind of get you prioritized, those are the kinds of things you want to know. If the statute of limitations is about to run on something and the IRS isn't really giving you a hard time on it, maybe that's what you skip and you focus on the state taxes that are never going to go away. So yeah, there's definitely a priority. And there are other, there's things that can be forgiven. Like you mentioned bankruptcy earlier. There are debts that can be forgiven that aren't taxes that you might opt to not pay if you were going to pursue a bankruptcy, because those might be things that you can discharge where your taxes cannot. So if you were looking at two bills, those bills may not be equal in terms of how you can dispose of them. Right. So if you can't get rid of one, maybe that's the one you pay down. So again, that's the kind of advice I would definitely recommend seeking out a professional, whether it's an accountant, an attorney, an enrolled agent, somebody who can sit down with you and say, look, here's what needs to happen. Here's the order I would recommend, because especially when you feel like you're sinking. Sometimes people are just plugging holes. So they're just paying whoever's the loudest. And that's not the best option, because the IRS is actually oddly quiet a lot. Like they'll send you mail, but they're not calling you every 5 seconds, whereas MasterCard is. Mm-hmm. So maybe you pay off MasterCard because you just want the phone to stop ringing, but that's maybe not the best strategy. So I would definitely recommend talking to somebody and saying, like, here's my limited pile of money. Here are my obligations. Here's what I realistically expect to see or not, depending on whether you're unemployed or what's going on. Help me figure out what to do.
There are people who call me now, mostly because either you or I, we could be points of entry for people who have problems. Mm-hmm. So could a psychologist or psychiatrist or whatever. Sure. There's a point of entry. And I certainly need to know at all times what my what the limits are of the advice I can give. And so I'm generally telling people to go take a consultation with a lawyer, because often they have complicated issues, especially if they're involved in criminal matters.
Right.
But what I see is people panic, and they want to be good people. They want to do the right thing, but they don't know how to survive in trauma. They don't know what to do. Right. So I've had people call me and say, for example, well, we can't pay our bills in this business, a small business. We can't pay our bills. We don't know what to do. Money's dried up. So I'm borrowing money on credit cards, personal credit cards, to pay corporate debts. Yes. Because they think that's the right thing to do. Mm-hmm. And maybe it actually helps mollify some kind of shame or guilt or something that they have, but there's no there's not particularly a good strategy employed right there. So what I do, I say right away, stop, call a lawyer right now, because you need to know what they can come after you for and not.
Right. And one of the things that I think a lot of people don't always realize is that when you have a business, one of the first things that people tell you when you're starting your business is you should incorporate, and you incorporate because you want that liability protection, right? So if something bad happens at your business, then they don't take your home.
Right.
When you start doing what you just said, which is mixing those things, two things can come of that. One, it makes record keeping really hard for when it comes time to do your taxes. And I can't tell you how many audits where IRS is looking through personal checking accounts and things because you're mixing funds. And that's not to say, I know a lot of accountants absolutely 100% say you should have separate accounts. I think that's true if you have a separate legal entity. A lot of people who are solos or who are gig economy, they may not. And I know that there are probably accountants listening that are banging their heads on the table saying, no, you should always insist. I think it's the best idea possible to separate your assets from your business, even if it's not a separate legal entity. So if I'm Kelly Erb Catwalker, I would prefer, if I'm your lawyer, I prefer you to have a separate Catwalker bank account and a separate Catwalker credit card, and then your personal stuff. Realistically, as a busy mom, as somebody who owns a business, I get that that's not always going to happen, especially if it's a side gig or if you're freelancing, because it's much easier. If I'm the Erb Law Firm, which is my law firm, if it's the Erb Law Firm, it's a whole lot easier for me because we have that already set up. I have a person, I have a bookkeeper, I have, somebody who pays my bills for me. I don't have to do that. But if it's just me, then yeah, you mix things, right? But when you mix things, first, as I mentioned, you're confusing things for the IRS on an audit. And then second, you're potentially putting that liability protection that you work so hard at risk, because now you've said to creditors, you're not really supposed to touch my personal assets because they're completely separate from my business, except for the times that I've decided they're not. So, you're kind of blurring that line. And so it's really important, I think, to try to keep things separate. And if you're finding yourself needing to loan your business money or those kinds of things, you should really try to formalize those agreements, even if it's making notations promising to pay back, that kind of stuff, just so it's not so loosey-goosey. But I agree, though, that when you get overwhelmed, it becomes really easy to just, I'm transferring money back and forth or whatever is easy. I'm gonna use my business car for my personal use because I'm going to get rid of my personal car, and we'll just call it, my business car. But the IRS says, where's your regular car, and you don't have one, then that, becomes problematic. So you have to be careful when you're blurring those lines.
Yeah. On the white collar side, there's something similar because, for example, if your business is deemed a criminal enterprise, for example, what they can do is they could seize your assets, or they could or they could freeze your assets, and it's helpful to be able to have clear tracing of what was acquired outside of the business and what was acquired inside the business. And I can't tell you how many times people will come to us and say the wife's personal assets got frozen by the U.S. Attorney's Office, and she had nothing to do with anything. Potentially, what I mean is the innocent spouse, not the wife.
Yeah, sure.
Innocent spouse.
Yeah.
But she doesn't. But the records aren't clear that this was actually money that she inherited from her parents.
Right.
And now they've come into the combined funds, and perhaps what they've done is they've used money to buy a house. So now how to unpack all of that so that it can to find out what are tainted assets and untainted assets can be really difficult.
Yeah, we see that in the tax world a lot too, though, because if you if you're moving assets back and forth, I have a client whose husband got into a lot of trouble, and all of a sudden, IRS was trying to seize their personal bank account. They got a leaving notice, and she's like, but this doesn't have anything to do with me, and that's a lot. That becomes more expensive trying to prove that it doesn't have anything to do with you. And then the other thing that you mentioned when you were talking about like commingling and how it can potentially be problematic is there so many times. Then you mentioned spouses. It does tend to be wives in my experience that kind of get sucked into some of this.
Of course.
But when people first start their businesses and they want to either look bigger than they are, or they all of a sudden the wife becomes or the spouse, but often the wife becomes the secretary of the corporation or becomes the tax matters partner. I can't tell you how many times I've seen that, kind of going back to the trust fund tax issue. I'll tell you a devastating story. I had a client who years ago she was in an abusive relationship, left, got a job, thought things were better, got a notice that she owed hundreds of thousands of dollars to the state in sales taxes for a company that she had never worked for. And we investigated, and it was her husband's company. And at one point in the relationship, she had signed some paperwork agreeing to be a tax matters partner. She was treasurer. She didn't sign tax returns or anything, but she signed the early papers. So when he did not have any money to pay these bills because he spent it, they went after her, and it was really hard. It was expensive to get them to even listen to her because they had a piece of paper she had signed, and she admitted she had signed it, but she didn't know what it meant. And so when you talk about, going after commingling, one of the things I counsel people a lot is that, your business is your business. If it's intended to be a family business, that's one thing. I have a law firm with my husband. That's very different than I'm going to start a business and I'm going to get people in my family to sign things so that we look bigger, or because you have to have 2 people in Pennsylvania to form a company or whatever. Right. Like if you don't have enough genuine people to start the business, maybe it's not time to start the business. Like there are those kinds of discussions you need to have rather than kind of ending up with these collateral damage from other folks that you didn't intend to necessarily suck into this problem. I mean, in her case, she had a husband that wasn't willing to, or an ex-husband that wasn't willing to admit that it was his fault. But, she'd never had anything to do with his company ever. Never. But she was on the hook.
Well, I'm pretty much in the collateral damage business. So,
I'm sure.
So it's not really a joke, but unfortunately, there's just so much wreckage, and untangling it from emotional and spiritual, and all these things go together because we don't like to see relationships break up. We don't like to see marriages break up, but sometimes or often when people are at the extremes of crises, these things happen. This is probably a good jumping off point to talk about SBA and PPP and PPP loan forgiveness, because I don't know about you, but I'm getting a lot of calls just because of the my podcast with you and from the Forbes articles and the entrepreneur articles. I'm getting calls from people, and it could be as simple as I own a pizzeria and I put my I wrote down that my wife and kids are employees so that they can get additional funding and potential forgiveness on PPP. So am I in trouble?
Right. I'm saying that too. There were a lot of people, and you and I talked about this before, but I think there were a lot of people who found themselves in a desperate situation and then rushed to get these loans that they didn't give you a whole lot of time to consider.
Right.
And they maybe made missteps. And, the feds have made no secret about the fact that they're chasing people down. I probably have the opposite call from you though. I have been getting calls from businesses where people are worried, but I've also been getting a lot of emails, and I think it has a lot to do with where we are right now in terms of the economy. But people who are angry and trying to rat other people out because they're convinced that, there's no way that Jeff's driving that car he's driving with his pizza parlor not being open. And the SBA does have hotlines, and they have encouraged people to reach out for clear cases of fraud. But I do think that there is some real anger over people who are seeing maybe that Kanye West company got some money, maybe that the Lakers got some money, and they feel like, how come everybody else is getting something and I'm not? And that's not fair. Right. So they're kind of throwing other people under the bus. I have gotten quite a few emails asking me how they can turn somebody in. So I refer them to the SBA page on that. There's a website, a place where people can report. But one of the things I used to talk about a lot in the tax world is, the idea of revenge porn, that, you're going to get somebody back. The same thing happens in the tax world. This idea that you're going to turn somebody in for tax fraud, same kind of thing with the loan fraud, to kind of get back at them, because you feel like, and it's often employees that are angry because they were maybe paid under the table for a while and now they feel cheated, and so they're going to get back at
they have something on you.
Yes, and I have this, and spouses. I have it with spouses too. My husband's been cheating on his taxes for 10 years, and I just found out he's cheating on me, so I want to turn him in. And they don't always understand that when you throw that person under the bus, they're going to drag you with them, especially spouses. And employees, same thing. Like, it's if you turn in your employer because he was paying you illegally for 10 years and he didn't pay you your last quarter, so now you're really mad. You need to remember that you best be sure that your books show that you've been reporting that income that you've been paid for the last 10 years. So that's what I'm seeing. I'm seeing there's a lot of palpable anger. I do think it's because, again, you can't see the unemployment numbers that we're seeing. You can't see the businesses going under that we're seeing. And then people are looking and they're saying, who's getting all of this money? Where are these trillions of dollars going? And why aren't they going to me? And this doesn't seem fair. And I'm pretty sure that Jeff drives a nicer car than me, and that kind of thing. So I'm a little fearful that some of the coverage, I've talked about this on Twitter, some of this coverage of PPP fraud is turning into like PPP loan shaming, where
a lot of it.
Oh yeah, and especially when the transparency came out, where they listed the businesses. So there are entire threads on social where people are trying to not rat out, but kind of figure out who got money, because if you got under the 150,000, you only had to put the code and the area. So people are like, wait a minute, it's a beauty shop and it's in Glenmore. That must be Mary's place, and they're trying to figure out who. No, it's true. It's true. But I think that it's because, again, I think people fear that other people are getting something they're not. And I think that part of the blame for all of this lies with the SBA and the way that this was rolled out, and people knew things and then they didn't. But a lot of it is it's kind of a perfect storm of, there's timing pressure, there's economic pressure, there's there was a report, I think it was in The Guardian, there was a report recently about the numbers of workers that they fear are claiming depression now from not being able to go to work. So there's this whole sense of isolation that we're feeling because we're all at home. You can put all these things together, and it's just creating this perfect storm of some angry people. And then you see the people who really are cheaters. And so they're like, ha, look, that person got caught because they were a really bad person. This is this whole idea, you've done something terribly wrong. I'll bet there's more people like that out there. And that's what I'm hearing.
Yeah, I think there is a lot of schadenfreude out there for people. But also the Kanye West criticism, for example, I'm just using him as an example. How can you be too big to fail and at the same time claim you're failing? it feels like we're getting whipsawed between those things.
Well, but I think that's part of the difficulty is that you didn't have to for the PPP prove that you were failing. Like you have to for some of the other things, like you have to show for the employee retention credit, some of the other tax benefits, you have to show that you suffered. For the PPP, I forget the wording. I don't have it in front of me, but I think you just had to show that there was a potential to fail. And that's what I think when the Lakers and Shake Shack and a couple of the other places, organizations that gave back the money, one of the things that they made a point of saying is they didn't break any rules, because if you look at the certifications, it says something about economic uncertainty. If you're not sure. Mm-hmm. And so that's the justification, right? But I agree with you. I think that's why a lot of folks give it back too. But there's also scale issues that I think sometimes people get lost on, because what, I can have one employee in my business and be able to pay them, but maybe not have 1,000 people in my business that I can pay. And I think that's some of the scale issues aren't fair sometimes, because people look at numbers and not. The whole point of the PPP loans was to keep people on the payroll, right? So it's a good idea, and we want people to stay. We want people to be paid. And if that's what they're using the money for and people are getting paid, that's a good thing, I think, whether you are a 200 employee business or a 2 employee business. I think where, again, it gets difficult is if you have somebody like a Kanye going and publicly claiming that you are doing amazing and you're going to be a billionaire and, and then saying, but I can't pay my employees. I mean, I think that's the disconnect. And there was another, and I can't remember the business, but there was another business where the guy actually got shamed into returning it because he had been publicly stating how well he was doing. Yeah. It was a Forbes article where the guy was saying how well he was doing. And then they found out that he had gotten a lot of money from the PPP. And but I do think that we have to be careful not to equate getting a PPP loan with being a failing business, because the whole idea is to keep your business successful. Yeah. So as you and I talked about before, if you're actually failing, then maybe the PPP loan wasn't the thing that you needed. Like maybe there's an overhaul that's needed, rather than just like a lifeline. I mean, this is meant to be kind of like a lifeline to keep you going.
So there's a lot of articles lately about how maybe PPP loans or maybe even the EIDL loans are fool's gold. And because they can only cover a certain amount of time, and they don't last forever.
About 3 months.
Right. And so now we're in a situation where the pandemic and the economic decline has lasted longer than the corpus of the loans actually will cover.
Right.
And most of these businesses are emerging from the other side, and things are not necessarily better. And maybe what you have is a debt on top of the problems, and some real uncertainty that's out there about what forgiveness is, what will be forgiven, and some advice even to not even attempt forgiveness now, push it out to 2021, because the rules keep changing. And maybe the rules are going to get better. So, for example, they'll just do blanket forgiveness for everyone, say under $150,000. So, what's the right advice right now for someone who's made it through with the help of some assistance, the 2, 3, 4 month period, but now up against the wall, the restaurant is not going to make it, or we need to figure out how to limp along. When do we apply for forgiveness, and what do we do now?
Gosh, I wish I knew. Well, no, it's true. One of the things you said, and this is where, when I said earlier, when I was alluding to the fact that I do think some of the blame for what's happening rests with the SBA and Treasury, is these rules that are changing constantly. It's, not only is it stressing out my entire profession, but it's unfair to businesses. Pandemic aside, if I go to my bank tomorrow and I say, you know what, I need $10,000. I just do. I can't pay my rent this month. I have slow payers right now. What do? They're going to be really clear with me about how much I can borrow, what the use of that money is for, if there are any restrictions. There may not be. When I have to pay it back, and under what circumstances it might not be, I might not be able to repay it. Like there may be a forgiveness. There may be here's what happens if you don't pay it back, right? So, maybe it's secured, maybe it's not. Like, all of this before you sign the paperwork.
Right.
The problem with this PPP, and EIDL, I will say is at least a little more established. So I think it's a different a little bit of a different ball game. But for PPP, when you signed that paperwork, if you signed it, let's say you signed those papers in April, May.
Right.
Right now, there's been temporary guidance, there's been interim rule guidance, there's been final interim rule guidance. Constantly, we joke, Fridays at 4:15, the tax Twitter collectively waits to see if there's going to be new guidance. It's regular now. And you are not necessarily anymore subject to the same set of criteria that you thought you were. Now, the SBA and Treasury takes a different perspective. They think they're just tweaking. But so when you ask, what do you do? If you had asked at the beginning of the program, I would have said, figure out your forgiveness period at the end, submit your application. Like, it was very, very clear what you do. Now there are options. There are alternative dates. There are the rules for forgiveness are changing. The rules that were in both the HEALS Act and the HEROES Act. So the Senate and the House Act. The Senate bill was proposed but not voted on in July, and the House bill passed in, I want to say June. It was spring.
Yeah.
May, I think. Those are not law. Those were proposals, but all of them have suggested changes to the rules. The other one that your listeners may be familiar with is the you can't deduct the expenses associated with the money that you spend out of the PPP because it's forgivable. So the Treasury is taking the position that you can't deduct those expenses. Some tax professionals feel that's the wrong result. And they've actually asked Congress to address it. Congress keeps, depending on the week, saying, maybe we should, maybe we shouldn't. So people don't know if that's going to change. It's really hard to give guidance right now. So I can't imagine being the small business asking, because if you ask 5 attorneys that question, I'll bet you'll get 5 different answers. My answer is to find someone that you trust and keep them informed and keep listening.
Why don't we kind of explain the deductibility issue or unpack it just a little bit? Because It seems to me that if what you bring in is income, you can offset it by expenses. But if what you're given is a gift, then you can't offset the expenses. Is that basically what they're saying?
So a lot of this is where you're going to get hate mail from tax professionals who don't agree with my assessment here. I actually believe that the IRS is right on this to not grant deductibility for the expenses for the exact reason that you said. And before anybody fires up your laptop to send me examples of when it doesn't make sense, I do agree that there are situations where it doesn't make sense. But for the most part, what they're saying is, if I give you $100,000 worth of income and you spend $50,000, well, 50 is a weird number because it's going to mess up my math but you spend 60, then you have 40,000 in income left over, right? Because you had $60,000 of deductible expenses. If you get $100,000 that we're not going to call income, IRS likes to match income to expenses, income to deductions. If you have those expenses, but you're paying it out of money that we're not going to tax you on to begin with, you should not be able to get that deduction. They're saying you're double dipping.
Right.
There is some truth to that. So I understand why IRS took the position that they took. The reason that I understand the anger, however, is that was not made clear in the beginning. And there are certain situations, including payroll taxes and other out-of-pocket expenses, where it's not clear that it would be either includable in the forgiveness. There's lots of situations where you could end up with a situation where you might be spending money out of pocket that's not related to the forgiven piece, and you may not come out ahead. So, and, tax geeks, the ones that I associate with on social, many of them have put forth like concrete examples of how that could happen. But overall, the idea is that if it's not income, it shouldn't be deductible. But, if we were to all agree that that's the right result, it still doesn't take away from the fact that was not made clear in the beginning. It also doesn't take away from the fact that more than one person in Congress has expressed, on both sides of the aisle, have expressed repeated concern about this not being in the bill. And then that's why there have been suggestions that this would be fixed in Congress. I think what's driving people nuts, kind of again, the theme that we've been talking about is there's so much uncertainty. And when you're already in an uncertain economic position, if you're not sure where your next check is coming from, if you're not sure you're still going to have a job, to not know how the money that's been promised to you to help you is going to be treated overall just adds to that worry. It adds to that confusion. It adds to the expense because now you have to pay someone to help you figure it out. It's not fair. I mean, and I understand that, again, this program was kind of rushed out, but how many months are we into it now that we still don't have any understanding? And it feels like it's been top-down guidance. So sometimes people ask, for example, people ask minutiae questions, and then all of a sudden we have guidance. We've seen that with stimulus checks as well. Of course, and so it's hard. And I think that, you know this too, from money is stressful the best of times. The thing that can sometimes make you feel better about the money is understanding what the next step is and understanding what your path is. So that's why when a taxpayer comes and they say, I owe this amount of money, that's why we talked about, like, let's prioritize. Let's figure out where you need to be. Let's figure out if I told you that trust fund taxes were dischargeable today, but then they're not tomorrow, and then they are again the next day, that just creates constant agitation and worry. It's not helping you with certainty. That's why we don't do that. That's why the law is written the way it is. That's why we have the regs. That's why people can help guide taxpayers into better situations. It's really difficult to guide people into better situations when you don't have that firm footing, when things are constantly moving. It's really hard. And I've talked about this a lot, but as much as it's frustrating for taxpayers and as much as it's frustrating for small business owners, you have to know that tax professionals, we're sleeping at night. We're not sleeping at night, tossing and turning, trying to figure out how we can help people when the rules are changing all the time. Right. It's hard.
So are you saying, or is there some kind of implicit advice here that the most conservative way that you could look at this is, government, if you're going to give me $100,000 in PPP money, I have to match it with 30%. Say, you'll give me $100,000, but I have to put up $30,000 because I might have to pay taxes.
Well, you won't have to pay taxes on the 100. I mean, so I don't want to scare anybody. The forgiveness piece is the forgiveness. I mean, unless you don't meet the criteria for forgiveness,
right? But
the it's not income to you. That's clear. Where the problem is can you then deduct on top of that? Because
exactly.
The kinds of, for example, payroll, which is what the whole point of it is. Payroll comes with extras, right? Payroll is not just, I'm paying you $10 an hour. Payroll is, I have to pay my portion of Social Security and Medicare taxes. You have
Right.
to pay your portion of Social Security and Medicare taxes. There's going to be withholding. There's going to be state unemployment insurance. There's a lot of factors that go into it. And, which of these things can we deduct, especially if we have to pay out of pocket? And what if that goes over the 100? I mean, that's where people, I think, are really confused. But just to be clear, the money itself, if it's forgiven, which if you follow the rules, it should be, is not intended to be taxable. The concern that people have is whether the expenses related to the money are also deductible. And right now, the answer is no.
So, where I'd like to head towards for the end of this of our conversation, which is, by the way, fascinating, and I hope
I love talking to you. Thank you.
Yeah, and what I'm really hoping is that people aren't afraid to kind of dig their fingers into this, because this is your life, this is your business, and this is kind of the most important thing that you can focus on right now, because as hard as it is to launch a successful business, it's pretty hard to unwind one too.
Absolutely.
These are all things. But what I'm seeing now is a lot of professionals who are out there in a hurry, who are claiming to have I wouldn't say magic wands, but like a lot of big accounting firms, law firms are having forgiveness portals, for example.
Okay.
And so they have the calculations and they have the formulas. And obviously, you and I do a lot of reading on this subject. And what it seems to me is that the very best thing that I could do for myself, or that someone could do for themselves, if they are going to be making an application for forgiveness, is look at the rules, are what the rules are to file an appeal if you're turned down. Because everything that you need to produce to move your appeal forward are really the same documents you need to be able to apply for forgiveness.
Right.
But what I don't think is that the people whose businesses are in decay, maybe they can't pay their professionals right now. They're struggling just to pay their mortgages or their rent or even put food on the table. And yet some of these documents are super complicated. They're things that aren't ordinary course of business documents. You have to actually put them all together.
Right.
And this is not like the kind of stuff that you can, at the end of a business day, spread out on the bed. You have to have some innate understanding of the way these things go together. So what do you do? Now it's, what do I do if I can't afford professionals to actually help me put my application together, and I don't want to start going down one of these portals from companies I don't know? Right. What are the steps?
Well, so I'm gonna be so lawyerly and say you need help anyway. So there's a lot of I think there's a misconception that it's always expensive to hire professionals, and that professionals aren't for everybody. There's somebody out there who's a good fit for you, in terms of money, in terms of style, in terms of level of involvement, because there are people who sometimes want to do everything. They just want someone to hold their hand occasionally and make sure they're going in the right direction. So my advice would be, so I'm not going to answer your question the way I think you wanted me to.
That's all right.
But my advice is to find your person. Like go out there and find. It doesn't have to be an attorney. It doesn't have to be a big law firm. Maybe it's a business coach. Maybe it's an accountant. Maybe it's an enrolled agent. Find someone who can help keep pointing you in the right direction. And actually, I have a podcast episode coming up shortly on the importance of bookkeeping, because I think one of the things that we found out with PPP, with all of this lately, is the importance of bookkeeping, not only for the application at the beginning, but exactly what you're talking about now, so that you don't have to scramble at the end. And you know what? If you invest in the time to figure out your system, whatever that is, whether it's going to be just like QuickBooks, whether it's going to be hiring someone, if you take the time at the beginning to figure that out, it makes the end easier, right? Mm-hmm. Or the middle easier. I understand that by the time you're at the middle, you're of course thinking, why, this isn't helpful for me, because if I had known in the beginning, I would have done it in the beginning. We're not at the beginning now. But you can still find your person now. You know what? I'll give you a perfect example. I know I had a client who I kept saying, you need a payroll company. They didn't have a payroll company. And they were constantly getting penalties because they weren't paying on time. They weren't paying the right amounts. And I said, you need a payroll company. Well, the first couple of payroll companies that I referred the client to had a rule that you had to show like demonstrated compliance for a certain period of time before they would take you on. Well, that wasn't helpful because the person was floundering, right? Yeah, like they needed someone. So we just kept banging on doors until we found the company that said, you know what? Show us that you paid last quarter and let's start fresh. Mm-hmm. And that was what they needed. Mm-hmm. And you know what? And then it wasn't a problem anymore. I mean, they had some other issues from before, but like moving ahead, they weren't the problem. That wasn't a problem anymore. And I think sometimes that's what you need to be able to do. Mm-hmm. You need to say, you know what? I really screwed this up for a period of time. It's going to be hard to fix. I'm not going to give it up. Like, I'm not going to say that I'm not going to fix it, but I need to figure out how to get started moving forward. And sometimes that's really easy. Like I tell my clients a lot of times, like, if you're coming to me and you tell me that you haven't filed for 10 years, that doesn't mean you can't file this year, right? Like, file this year and say, moving forward, I'm going to do these the right way. And then we'll go back and fix all the problems. Yeah. So brilliant. if you're sitting down and you're thinking, I'm overwhelmed because I can't figure all this out, figure out what you need at that moment to move forward. And then we'll figure it out later. And I do think that it's true in tax, it's true in business, it's payroll taxes, it's all of that stuff, because it can be so overwhelming when you talked about putting everything on the bed. Like, I've been there. Like, I know that moment of sitting just surrounded by papers, whether it's IRS notices or whatever, and it can be so overwhelming. It's overwhelming for my clients. I'm a business owner. I've been there too. We got audited years ago. Like, it happens. You have these moments where, it feels very overwhelming. And I think that, the best thing that you can do is to look forward and say, I'm going to find my way out of this, and we'll figure it out the rest later, which is not to say you ignore all the stuff that went on. Because I did say there are assessments and there's time for collections. You don't want to forget about all of that, but don't get so bogged down in that you can't move forward at all. Like, just trudge through. And I think so much of that has to do with finding your person, finding somebody that you can work with, finding someone you trust. Like, one of the things you and I talked about in the last program is, money, especially money in business, it doesn't stop at your checkbook. It affects your relationship with your spouse. It affects your kids. Like, it affects, where they're going to school. Can you pay for their college? What do your neighbors think? Maybe you don't care what your neighbors think, but those kinds of things, those relationships, they're all affected by money, and it can all kind of get bogged down. So you need somebody that can help you sort that out. Yep. And again, your person could be a different kind of person for every listener that you have. So it's not going to be, I'm not saying run out and get a lawyer. Although it's good to know a good tax lawyer, but I'm not saying run out and get one. I'm saying that it could be different for every person. And I would just, if you're that small business person and you're like, I want to do all this myself, I'm going to tell you right now that you can't. Mm-hmm. I run a small business, and I mentioned at the top of the program, I have a person. I don't do it all myself, and I went to school a long time to figure all this out. So you can't do it all yourself, and you shouldn't be expected to. And if you can't, it's okay to be human and say, I need help. I think that's important.
This is just another manifestation of why we tell people that it's isolation that destroys you. and that the solution is in community. I mean, but as the walls start to cave in, and you're feeling that trauma, it can be very easy to isolate. Here's the answer: just push through and ask for help, because there's help out there in all kinds of different forms.
Yeah, and there's also free help available. I mean, not necessary for like PPP necessarily, but there's free legal help available. There's free tax help. There's SBA. Like, I should say, since I bashed them earlier, SBA actually has, like, if you go in, like, obviously can't do it right now because of the pandemic, but when you go into their offices, they have small business workshops. They'll help you put together business plans. They'll look at your business plan and say, this is or is not working. Here's what you need to do. So there are a lot of resources out there. You just have to be like, keep your eyes open and your mind open to listen to advice.
Yeah. And all kinds of other different places like SCORE and county foundations and small business, all kinds of different resources.
Chambers of Commerce. And sometimes even your bank. Like I mentioned earlier, if you have a good relationship with your bank, why not? And I'll tell you another quick story. I know that you had a quick point, but when we very first started our law firm, I'm the world's worst for collecting bills. Like, I hate it. I just want people, like, I wish people would just pay me in advance so I don't ever have to ask anybody for money. I hate it. Or if I could just do it for free all day long, that would be even better. But we would have clients that were slow payers, and I didn't care at all, which was the wrong attitude, right? 100%. And we had this bank. We were at a small bank at the time in Philadelphia, and we had this bank. And we were at a social event one day, and one of the VPs was there, and he walked up to me and just kind of made a joke. And he's like, cash flow, cash flow, cash flow. And I'm like, what? And he's like, cash flow. And I knew what he meant, and but I just kind of like, oh, you're funny. And then a few months later, we had a big client who was arrested for embezzlement. They owed us a ton of money that we had foolishly expected them to pay, and had spent some of what we expected on our line of credit. And we went to the bank to use our line of credit, and the banker was there, and he's like, cash flow, cash flow. And I'm like, you're right. Like, and it was a good moment for us. It was early on in the business. It was a good moment because before that time, I thought I knew what I was doing. So even your bank can, and that wasn't his first rodeo. Like, he had seen businesses fail because they might have healthy receipts, but if they are not regular, it can be problematic. And he knew, and I didn't. So people know more than you, and it's okay to listen to them. So I was actually really grateful to our banker for instilling us. I wish I'd listened faster before our client was arrested. But it was a moment where we started talking about revisiting the way we did billing. It was good.
So Kelly, tell us all how to reach you, and what your website and your various outlets where people can find your writing, because it's brilliant.
Oh, thank you. So I'm easy to find. My website is taxgirl.com, and you can find me on social practically anywhere at Taxgirl. So Twitter, Facebook, LinkedIn. And I also write a column for Forbes. So if you just Google Forbes Taxgirl, you'll find me. And I have a weekly column that comes out on Thursdays with Bloomberg Tax.
Wonderful. Kelly, so wonderful to spend time with you again.
Thank you so much for having me. I really appreciate it.
Yeah. And let's make sure we stay in close touch, because I'm sure there's a lot of cool things we can do together.
100%. Thank you.
Okay. Thank you for being with us, Kelly.
Thank you.
All right. Bye.
Bye.
Thank you for joining us on White Collar Week, sponsored by Progressive Prison Ministries. You can learn more about us on our website, prisonist.org. That's prisonist, like feminist. And please remember to rate, review, and share this podcast so that families suffering in silence can find us if they need us. See you next time.